All right, everybody, ladies and gentlemen, hello and welcome to us here at Nadex. My name is Philip and I will be your presenter for today's webinar. Today we want to understand what touch brackets are, how touch brackets actually work. And guys, thank you very much already for the first feedback here that everything is working. Ludmila, KM, thank you very much. And yeah, to our other attendees, if you happen to have questions, please put those questions into that small questions box, and I'll do my very best to answer your questions as we move through the webinar. Don't be shy. I'm looking forward to answer your questions to my best abilities. And yeah, you're not interrupting my flow. I'm really looking forward to having that interaction with you guys. Today's webinar is scheduled to run for somewhat between half an hour and 3/4 of an hour, something like that. We will see how fast we make ground, how good we move along, and we just take it from there. And of course, before we get started, you already do see here those first risk disclaimers on the screen. I have to make you aware of those before we start the session. So please take a moment of your time to read through them carefully and make sure that you're really comfortable with them. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the risk structure of the instruments you're using before you are getting active in the market. It's neither Trade with Position nor myself are registered investment advisors. Nothing that we say should therefore be considered to be actual investment advice. Especially true for the live part of this webinar. All examples are shown for educational purpose only. Unfortunately, I don't have that crystal ball. I don't know what the market is going to do next. I can formulate an idea, and I want to show you how I arrive at that idea, what the future might bring, but it's always this probability thinking. I don't know what's coming for sure. So please make sure that you understand what we're giving you here today. And yeah, that being said, let's just have a look also at the Nadex risk disclaimer here. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. And this risk disclaimer also is, of course, perfectly true for touch brackets, also perfectly risk-defined instrument, just in line with the other instruments here available for trading at Nadex. Today's webinar is brought to you both by Nadex and Trade with Position. So I would like to kick off with a very brief introduction of those two companies. Nadex, of course, is your derivatives exchange for anything binary options, spreads, and touch brackets, subject to your regulatory oversight by the CFTC, newly formed in 2007. And just like all the other big powerhouses of financial derivatives trading, based in Chicago, which is the financial heart of the futures and options markets. All contracts are settled in cash, no physical delivery, especially nice if you had an exposure before with normal regular futures trading or options on futures trading. You always had this potential risk that if you didn't monitor your positions closely and missed some of those crucial dates, you might end up with having to take delivery. Not something nice, and here that risk is completely mitigated by all those positions being settled in cash. Ease of mind when it comes to trading. Wide range of global markets to trade and 3 unique vehicles to trade those markets with: binary options, call spreads, and touch brackets, on which we want to focus on here today. I'm doing this webinar for Trade with Position. We have been founded in 2006 by Nick McDonald. If you don't know about him, maybe just go to good old Google and have a look. And yeah, nice story time. Nick never really had this idea to start this trading education company. His broker back in the day gave him a call and said, Nick, when we look at your account, obviously you know what you're doing. We see your account statements and we see your trades. Couldn't you please teach our other customers the way that you are trading? This is how everything got started. And we have been providing international trader training for clients of global brands, including exchanges and brokers worldwide since then. Our partnership with Nadex started back in 2011, and we are a company run by traders, for traders. Our trading strategies are applicable on any good, liquid, trending market. Our strategies are trend-following strategies at heart. And yeah, as long as the market is trending, has good liquidity, our strategies should give us often enough decent entries. Will we win all of those entries? Absolutely not. I mentioned those probabilities in the beginning. This is just at the core of trading success, at least from our understanding. We will always have potentially profitable trades, and we will always have losing trades. And the big picture here is we want to have more potentially profitable trades than losing trades, and the gains that we have on those potentially profitable trades should be larger than the losses that sum up on the losing trades. Two components, trying to win more often and trying to win bigger. And this is what, over a large sample set of trades, creates our edge when it comes to trading. Trading, you can, of course, and this is the main way that I like to trade on Nadex, looking at the browser-based interface, and there you can easily access the markets, monitor and manage your positions. But of course, if you're on the go, check out the different app stores, you're able to install those apps. And if those apps are, of course, as it's browser-based, you can easily run the Nadex interface also on your browser, on your mobile devices. So just give it a try, take it for a spin. I like to monitor my positions on my mobile device. Just give it a shot if you haven't done so before. Today's agenda, an in-depth look at touch brackets and the mechanics behind the contract. What are potential benefits of trading touch brackets? And then we want to see a sample set of touch brackets in action on the live trading platform. First of all, why do I look at a certain market? What is my idea about what this market might be doing? And once I've formulated that potential setup, that potential trading opportunity, then the question is, how can I jump in and actually trade those setups using my touch brackets? I want to close that session on how you can take your trading further and start trading on Nadex already here today. So let's kick it off with an in-depth look at those touch brackets. What is a touch bracket? A touch bracket is a contract which trades within a range capped by a floor and ceiling. And with that regard, they are pretty close and pretty similar to what we know in the spreads that are already available here for trading at Nadex. However, the internal mechanics are different, because with the spread, essentially what we do have is a call spread, which means that price is not really tracked as precisely one-to-one due to the internal workings of the spread. Two options, then the Greeks come again into play. We have delta and we have gamma, which means that delta will be changing. However, with those touch brackets, price is pretty much tracked very, very closely and linearly with regard to the underlying market. So it's a much closer tracking of the underlying price that we have with touch brackets. How does it work? Well, 4 touch brackets are created for each market each week. And you can see the underlying, let's grab my fancy laser pointer here once more. That's the price of the underlying market. And those touch brackets are suited and constructed in a way that one is sitting here very close to the floor level, or the floor level is very close to where the underlying market is trading. The next one a little bit below and below and below, so that the fourth one, the underlying market there, is trading rather closely to, or rather close, sorry, to the ceiling of that touch bracket. Now, touch bracket means that we have this bracket, but what does the touch actually mean? Well, a touch happens when the underlying indicative index is pretty much touching the floor. So if it's touching the floor level, price drops a little bit here on this TB1, hits the floor level. This means now we do have a touch, and then the touch condition is satisfied. What does this mean? We'll talk about that in a moment. Same thing is of course true if price touches the ceiling. Price moves a little bit higher here, touches the ceiling of TB4, and then this touch criteria is met. So what happens if we have this touch? Well, if a touch occurs, the bracket expires, it's gone. and you automatically take your profit or loss. Then a new touch bracket is automatically generated with a new bracket range. So within the life cycle of that touch bracket, if price stays all the time between the floor and the ceiling, it just tracks the underlying market within that range, pretty much very close to 1-to-1, and then finally settles, and your profit and loss is pretty much the difference where you opened and where the market is closing at that point in time. But should the market move in between to actually hit the floor or hit the ceiling of that touch bracket, that position is automatically closed. So you can think of a touch bracket essentially like some kind of micro future, which tracks the underlying market very closely and has built-in stop loss and take profit targets. And the stop loss and take profit targets essentially are the floor and the ceiling, or just the other way around, depending whether you are long or short that market. Guys, does this make sense? Are there any questions so far? Time value plays much less of an influence, or is much less a factor here when it comes to pricing those contracts. And that's the reason with the spreads, you usually have time value in there. And this time value, therefore, is what prevents this one-to-one tracking of the underlying market. However, here with the touch brackets, all is good. This time value pretty much is non-existent. And for that reason, much closer tracking here. And if the floor or the ceiling is hit, position is closed. So once again, if the stop loss is built in and the take profit target is built in, once again, you have upfront a perfectly risk-defined scenario and situation. So once again, it's very easy to do proper position sizing. Our regular attendees know that I'm a big fan of doing proper position sizing and proper trade scaling. And for that reason, fits perfectly in there and makes perfect sense here. So George is asking, and thanks for that question, when a new bracket is created, it still expires Friday, right? Yeah, absolutely. So the new one may only be 1 or 2 days to expiry, absolutely. And this can even happen just on Friday, 4 hours before expiry. The mechanism is always the same. Level is hit, all right, this one expires, P&L is settled, payout occurs, and a new one is immediately established. And if you want to re-enter the position on another one or the new one, you're happy to do so and just to jump in again. This is really starts Monday morning, or pretty much when the markets open at the beginning of the week, and then until expiry, and that mechanism just stays the same always. George, I hope that answered that question. Thank you very much, and by all means, keep the questions coming. So let's have a look at the order interface here and put those things a little bit into perspective. We are looking here into buying potentially a touch bracket. What's the touch bracket? Well, we're looking at euro against the US dollar. What's the floor level? 112.60. What's the ceiling level? 115.10. So that's the floor price and that's the ceiling price. And if we're looking into buying this market right now, buying one contract, the market trading at 113.05. So we're entering somewhere around here. My maximum loss is $51 on this one lot order. What's my maximum profit? $202. Why? Because just like with the spread, I'm entering very close to the floor level, which is beneficial for me for a buy order, because now price is able to move all the way in my favor if the market plays along, of course. And so my maximum profit, I can participate much more on a move to the upside than I have risk on a move to the downside. We have to keep in mind with the spread, that contract expires when time to expiry is done. This contract either expires if price never touches the ceiling or the floor, but if we enter here, the market briefly dips below the floor level, then this contract that position is closed. I've realized at that point my maximum loss, $51, and that's it. New contract opens up, and another time for a spin, another time for the game. That's the huge difference here. Touch means position is closed. It's a built-in stop loss. In this case, it's a built-in stop loss order at 112.60. Position is closed, and that's it. All right, so why is this? Same logic applies to entering when entering a spread. I want to enter close to the floor level because now I have much more upside. And on this trade example here, I have a 4-to-1 reward to risk ratio. I'm risking $51 for potential profit of making 202, but I only make this 202 profit if price actually touches the ceiling and the contract is closed. So this is not a binary type of scenario. Price has to be above something. No. Maximum profit only is realized if price actually pushes all this way up and touches within the life cycle of this contract 115.10. All right. So let's talk a little bit more about reward versus risk. Ceiling price. I want to sell a market. When I want to sell this market, I want to sell obviously rather close to the ceiling, because same story is true. If I sell close to the ceiling, my maximum risk in this example, $58. My maximum reward, price has all this way to travel to the downside here, and I can participate on that move. Therefore, my maximum reward in this example is $192. Reward to risk ratio 3.3 to 1. However, if I sold a touch bracket with this floor level and that ceiling level, and I sold when the indicative index was already sitting here in the lower part of that range, doesn't make much sense, because I can only profit on a $63 moves here to the downside. However, if the market turns around and I will get stopped out, my risk on that trade would be 187. So I'm risking $1 for the potential to just make 34 cents. Doesn't make much sense to me. Depends on your style of trading, and obviously you know the rules and the drill, but I like to have a decent reward to risk ratio on my trading setups. So which touch bracket should we actually pick to trade? If you think Euro US dollar is going to trend lower, which touch bracket would you trade in this example? Well, where is the market right now? It's trading at 113.041. I think the market might be going lower. So what do I pay attention to? I pay attention to where the ceiling level is. Here I do have a ceiling level of 115.10, something up here, way too far up there. I don't like that. Price can move quite a bit against me, and I will have to pay for every bit that this price moves against me. Then I have 114.60, and I don't care about the floor level at that point. It's really just, I want to be short in this example, and for that reason, I'm looking just at the ceiling level. 114.60, much better than the previous one, but not good enough. 114.10, not sure about that. 113.60, yeah, I like that. This means my ceiling level is sitting right here, and price has all the way here to drop to the downside to 111. So all this move to the downside, I can participate and cash in on that potential move. So my idea here would be that I could go for TB4, because this is the trade setup that currently gives me the best reward to risk ratio. And on top of that, 113.60, this is not a very tight ceiling level. Remember, once the ceiling is hit, and be it just for a microsecond, that position is done. Position is closed. Touch bracket expired, is gone. Therefore, I don't want to be very close here. I want to be close, but not too close. KM is asking a question. Just a moment while I read it. The question considers when the most active time for the underlying or for the market is. And my question or my answer here would be that the market participants obviously track the underlying markets. And for that reason, I would expect that the liquidity and the moves are much more in line and in sync with when the underlying markets have really their most intense trading. A good thing to track this could be, for example, to have a look at really the underlying market with the S&P 500, for example, look at the mini futures and there track the volume. So I'm pretty sure that the volume there picks up just before the morning session here usually starts and will definitely slow down Eastern time when the exchange pretty much when Wall Street closes down and the futures trading also starts to go a little bit lower, then we have this 1 hour break and afterwards trading picks up again. That's the night session, overseas markets trading, the S&P 500 minis, but less liquidity during those phases. And in this case, KM said, tells me it was the S&P 500. I would really track the underlying futures here and look for the most liquid hours there. The risk of getting some unfavorable execution and unfavorable moves in the underlying market is much larger when much greater when the liquidity is lower and the non-regular trading hours, let's call it that way. I hope that answer makes sense. So pay attention to the underlying markets. Especially the large markets, I feel should be pretty safe from market manipulation, but obviously it takes less volume to drive a market in the non-regular trading hours. All right, guys, thanks for that question, and by all means, keep them coming. So TB4 might be the sweet spot here, and yeah, market level is closest to the ceiling, better reward to risk ratio on this trade setup here. So what are the benefits of trading touch brackets? Chuck is asking, does the indicative have to touch the ceiling here, or just a single spike up and down through the ceiling can be enough to close the position? Two-part answer. My understanding is that yes, once the indicative price touches this floor ceiling level, that's all it takes for that position to be closed. So even if it's a very short spike exactly to that level or a little bit beyond and immediately comes back, that's it. Condition is satisfied, that touch bracket is done. I'm pretty sure that Nadex homepage has precise details, just like with the price settling routine for binaries and for spreads. I'm pretty sure that this is described with great detail there, how this is actually handled. But yes, once the indicative price touches, this contract expires. Thanks for that question. By all means, if those nitty-gritty details, if there are questions, first the homepage, but second, the good guys at Nadex are more than happy to answer all your questions there with this regard. And yes, it makes absolutely sense to be precise here and to understand what actually satisfies those conditions. Thanks for that question, Jack. So what are the benefits of trading touch brackets? Controlled risk. Just like with binaries, just like with spread, you know your risk exposure up front. This is so powerful. I just can't stress this enough. No nasty surprises, no nasty gaps against you, even if the market is gapping somewhere completely else, somewhere where neither the Fed nor anybody else would have thought that market might be going. You know your risk exposure up front. You know your maximum loss, you know your maximum profit, and that's it. No nasty surprises. Limitless trading opportunities. Trade as much as you want. And guys, this is not really done here much for in the or explained on the slides, but of course it behaves like a micro future. So why not trade the underlying futures markets? Well, you can trade much smaller. You have smaller trades here. You can easily trade those markets with a much smaller account. And the huge benefit is if you want to carry your futures position overnight, don't forget those margin requirements that you have with regular futures contracts. All this is pretty much voided here when it comes to trading those Nadex touch brackets. So essentially, you are trading micro futures here with built-in take profit and stop loss orders and much less capital requirements. no margin compared and fixed risk. So please keep that in mind, guys. Trade as much as you want, consistent capital requirements. It's easy. It's as easy to swing trade as day trade. You pick your time frames, you pick the markets that you like to trade here. You have a built-in trading plan. Floor and ceiling provide natural targets for both profit and loss. Once again, this idea, yes, you can actively manage your position, just like with the other contract types available here at Nadex. But once again, you don't have to, because those levels are built in. Small contract sizes trade the equivalent of micro futures and mini FX, and highly effective leverage, low capital requirements for potentially higher returns. Let's have a look here at those touch brackets in action. And the market that I would like to focus on here a little bit today is, of course, the S&P 500. Let's look very briefly at the big picture. This market is going higher. We have had a deep pullback here. Just goes to show that when the market is dropping, people are getting nervous here. This pullback was rather deep. Usually, I want to see a pullback that takes me into my moving average buy zone and then trend continuation. Here, however, we pretty much bounced at this 2,800 level, briefly made it above, and then rather steep sell-off, way beyond those price equilibrium levels. However, price managed to rally higher, finally made it past this 2,800 level. And yeah, the pullback, loss of momentum here. We see that we're currently setting up some divergence here with both MACD and RSIs, which can be interpreted as a potential warning sign of markets slowing down and potential warning sign of a little bit of trouble ahead. Does it have to be that way? Absolutely not. I try to gather small advantages, and the more I can identify that one scenario is a little bit more likely to happen than the other one, that's good enough for me, but I want to see multiple things going on here. So price pulled back. This time it pulled back. 2,800 pretty much stopped on top of this level here, returned. This on its own is currently rather a bullish thing. Today's price action, let's make it larger. Today's price action was quite bullish, but note what we have here. We now have this longer upper shadow, which just shows me that the bulls were not able to sustain that momentum that they had in the beginning of today's session. So if we start to drop down here with our time frames, and let's just have a look at an hourly chart, sure enough, all this here was good buying action, but now we just got the pullback, and those two candles here are what made this longer upper shadow here on the daily chart. Get a feeling for how those different time frames are reflected on each other, and what had to happen for on the hourly chart, for example, for that daily candle to look the way that it does right now. So the idea here is price might have pulled back, and I would like to wait here now for a potential small bullish candle setting up for a potential push higher. Will it push higher? I don't know. I don't trade this market right now. It's just a little bit too fuzzy, not clear enough, but that's the nice thing. We can make both a bearish case and we can both make a bullish case. And so the question is, the underlying market is currently trading at 2,815. And so which of those touch brackets might be tradable right now? And I'm logged here into the Nadex demo account, and I'm looking at my touch brackets. I went to the indices, and here I'm looking at the US 500. So US 500, and you can see we have 4 different touch brackets, and they usually start always with 1, 2, 3, 4. We're currently at 15, 14, 13, and 17. You can see that those already have had several touches in the past, expired, created a new one, and the numbers are counting up. So if I think this pullback is not over yet, and I think the market might be going lower, if I want to initiate a short position, where do I want to enter? I want to enter close to the ceiling. So what ceiling levels are available here? The market is trading at 2,815. And here I have ceilings of 32, 42, 52, and 62. So this one here is the closest to the ceiling level, which is available for trading. And so I just thinking that the markets might be going lower. Looking at selling one contract here, my maximum loss on this one contract would be $110, and my maximum profit is 390. Once again, if price rallies to 2,832, if price rallies to this level here, I will be stopped out. If price drops all the way to 2,782, that is only then that I can make my maximum profit here. Keep that in mind. Robert is asking which charts I was using or I'm using. This currently is TradingView. You can use any charts that you like, and just you can also click here on the Nadex platform directly here on in the charts column on this little symbol here. And you have some built-in charts here also coming up. This is now typically, because usually it works like a charm, it's just when I have to demonstrate it that I'm having issues here right now. Sorry guys about that. Play with those a little bit. Are those charts perfect? No, absolutely not. But for being included, being available everywhere and always, this is pretty awesome. You can also apply technical analysis there. Limited, but good enough to get an idea about what the market is doing and getting started there. So by all means, please take them for a spin. Not in this streaming environment here, where currently my platform is doing me, causing me a little bit of issues. Sorry about that. So selling this contract, selling one contract here, maximum loss 116, maximum profit 384, and I can just place this order now. I know my risk up front, and if the market is now continuing to drop, I will make that position will track along and will reflect the P&L, and I can close that position and manage that position actively, just like with any other instrument and contract available for trading here on Nadex. So let's think. Price has now pulled back, and if I get my small bullish candle here setting up, you might make the case, well, price here on this hourly chart, we are definitely in an uptrend, and I think this market still might continue higher. Wouldn't argue with that case at all. Right now, it's just a little bit too fuzzy for me, but if you think price might be pushing higher, all right, if I want to be long this market, where do I want to enter? I want to enter very close to the floor level. So let's have a look at the floor level. 2,812, the market is currently trading at 2,815. Honestly, guys, this is too close for my personal taste to where I'm entering right now. And the risk of being stopped out on that trade would be just too high for my liking and my taste. Let's just have a look at the numbers here. If I bought one of those contracts, I'm risking just $89 for a potential profit of 411. However, with price being so close here, judgment call. Personally, I would feel that this is a little bit too tight, too close, and therefore I might move away from that. Let's have a look at the next one, 2,802. This is quite a bit away, but let's go for that one here. I want to buy one of those contracts here. Maximum loss 334 for maximum profit 166. Definitely not a favorable reward to risk ratio on that trade. So just for the sake of completeness, let's go back to the first one that we had here to enter as close as possible. Going for one contract here. And let's just place this order for the sake of completeness. Guys, any questions here on my thinking process, on why I picked a certain contract over another one? And yeah, by all means, if you happen to have any questions here, please let me know. If there are no questions, and just as always, sign up for the demo account, take those for a spin, do a week to 2 weeks, just paper trading here, get a feeling for how the pricing of those contracts tracks the underlying move of the move of the underlying, the indicative price, and get a feeling, get a feeling for when those contracts close, when they roll over to the next touch bracket, and so on. Just play around. Paper trading will never prepare you for real money trading, but it is a perfect exercise to get you started with the platform, with the mechanics of those contracts. All right, guys, let's just come back here to that session and wrap it up. How can you guys start trading on Nadex? You've seen how easy it is to use those contracts. Once you wrap your head around those, pretty easy to get started. And yeah, just sign up for the demo account. Let's wrap it up here. Trading touch brackets, price action within a predefined range. Remember the floor, remember the ceiling. If you want to be long, you probably want to enter rather close to the floor to give more leeway for rising prices from which you can benefit. And for short positions, it's just the other way around. Automatically take profits or cut losses when a floor or ceiling is touched. Simple as that. Contracts that move linearly with the underlying market, much closer price tracking than it is with spreads. And control, you can pick the touch bracket in a forex or stock index market that has the right level of risk for you. Strategy, define floor and ceiling on each trade, provide known risk reward boundaries and clear profit targets. Effective leverage, no risk of slippage through a floor or ceiling, and no calls for additional margin. Guys, last slide. If you want to sign up for that demo account here, it still says it's a 14-day demo account. Good news, it's an unlimited demo account now. You can take it for a spin as long as you like and practice there. And Chuck is asking whether there was a special reason that I picked the S&P instead of the other indices from the USA. No, absolutely not. I like to track usually for my own trading the S&P 500, though, so that's always my go-to market. I see the S&P 500 as some kind of world index, and if I want to get quickly a good idea about what the global trading market is doing, I have a look at the S&P 500 as my first proxy. So that was the only reason for that, Chuck. No other hidden agenda there. All right, guys, visit the Nadex homepage, sign up for the demo account. If you happen to have any questions, be in touch with the good guys at Nadex. And yeah, guys, thank you very much for the kind feedback. Really appreciate it. Perfect. Ludmila, thank you very much. The very same to you.